no, the market is going higher. Oh my God. What the hell are we going to do? Guys, relax. We got this under control. August 16, Friday, 13 market moves. It's going to be an awesome day. This is the plan of action. And the question of the day is, can you smell the bearish reversal? And chances are you cannot smell it, so we're going to break it down why the market will ultimately go lower by the end of the day. So here's the deal. One of the conditions we outlined yesterday at the end of the video was that, look, the only way we change our stance of shorting the balances in this market conditions if we're going to break above 2871 on strong volume, and everything pre-market today points to a weak volume. We're going to glance at a few different cases here where we can clearly see that the volume is low. So market is up on low volume. That actually equates to a bearish potential today. Now, on top of that, the market is up, not only in low volume, but there's absolute absence of any catalyst. And, I mean, unless you want to count this goofy stuff circulating in the news, Trump wants to buy Greenland. Woo! Okay, that's certainly not a reason for the markets to be going higher. You know, don't indulge in all this craziness that you hear in the news, because there's no actual catalyst. There's nothing that has changed of why the market was dropping like crazy just a couple of days ago. Nothing has transpired, nothing positive, nothing has changed. So the fact that it's up on low volume with absence of any sort of solid catalyst, and on top of that, we got a 3 after a powerful move 8, okay, that actually tells us that we are overall in a bearish sequence, and it gives us a high probability of a move 2 today. On top of that, I'm going to break down specifically, I think a lot of people that watched the video yesterday were like, man, what are these yellow circles? What are you talking about? So we're going to focus on that in just a second. Today, we are buying DE puts, BYND puts, Shopify puts, Nvidia puts on any kind of bounce, which some of them are bouncing slightly pre-market on super, super low volume. So question is, what do you see in the chart of S&P 500? What do you see? And I know, you guys, good job, those of you that took the charts divergences course. You're looking at here and you're like, well, Leonardo, I see the bottom. I see that we're no longer going to go any further. We're not going lower. Can't you see it, Leonardo? Look at these bullish reversal candles. You taught me this stuff in the chart course, so maybe your answer was, look, this is what I'm seeing right here. So sometimes you got to go and investigate the chart just a little bit further to see if you find some other clues that can point to some other things. So yes, this answer is correct. We got a series of these reversals that are actually bullish, with the tails of the candle sticking with this thing formation at the bottom, right? Which tells you when the drop basically don't finish at the lows of the day, that there's some buyers coming in, and surprisingly they're all doing it at the same levels. Now, interestingly, what does the recent history of such formation actually tells us that could be happening next? What about this right here, guys? Do you see this candle and this candle and the third candle? This is identical to the situation that you got right here. So let's zoom in and take a closer look. It's just another way to look at this chart. So what we've got developing right here is actually the same replica was taking place right here. Same candles, bullish reversal candles. 1, 2, third day, big red candle, just like this right here. Okay, the only thing we don't have here is this one right here, but there's some that resembles it right here. But the bottom line is, the answer to the damn question is, this is what happens next. We ultimately move lower, not higher. So use today's pre-market bounce as an opportunity to short the hell out of this market, because the recent history tells us that there is a move lower. Another thing that's actually pointing to this, guys, is look right here. I draw this just above 2875 right here, this little orange thing, orange line, if you will. Last couple of bullish candles, look, these 2 white candles, look where they stopped out. They stopped out at that level about 2875. Now, we identified the level of 2871 yesterday in the video. Now, sometimes remember, these levels are not going to be 100% precise. There's going to be a deviation of at least a few points. So just keep in mind that sometimes the levels could overshoot by a little bit. Okay, now this is exactly what we've had here, right? We had very similar situation, 2 white candles back to back, followed by a gap up. 2 white candles back to back, followed by a gap up. Big white candle, followed by a red candle, followed by a red candle, followed by another red candle, followed by another red candle, followed by a white candle, followed by a white candle, followed by a red candle. Jesus Christ. I mean, can you see how, I mean, this is like a 99% as far as, you know, the color of the candles, maybe not the length of the candles, because clearly we're getting bigger magnitude of the moves here. But do you see that this and this is like 98.5% identical? Okay, so now that we've covered that, okay, let's zoom in on the volume. So yesterday I pointed out that we did have a concern. Now, from yesterday concern on Amazon being bought on the huge volume, not huge volume in relation to the overall volume on Amazon, which recently been trading around 4 million shares a day, but pre-market, the typical volume has been like this, like 22,000 shares, 40,000 shares in there. And yes, this was actually taken probably an hour later yesterday in relation to this. So when you're going to be looking at the volume close to the market open, this volume probably going to be maybe in the 60s, 70s. But the point here is we're not moving higher after a huge day on strong volume yesterday pre-market. Actually, the volume totally died out in Amazon and it ended up with like average volume for the day. Typically, the importance of these pre-market volume observations are such that they could be pointed out to a huge move. The Amazon stalled out and it just could not move any further. And this second day sequence today, we're seeing no follow through in the buying action in Amazon. As a matter of fact, where did all the buyers go today? Hold on, they're supposed to be buying. The market is up. We're 27 points up on S&P 500. Where are the buyers in Amazon? What's going on? I mean, 22,000 shares, guys, that's low volume. So all of a sudden, buyers' excitement fades after what appeared to be maybe we had something going on here on the bullish side, but we didn't. When excitement fades quick like that, do not expect any huge moves to the upside. Now, when we actually look at the chart, I know it's tough because you're like, man, look at this. Leonardo, can't you see this? We're sitting at these orange line right here in Amazon, and the probability that it's going to break below like this, like your orange area is pointing out here, is just not good. It's not good. But the reality is, this chart, when you look at it, it is such a proportionate chart that it almost bags the completion of the chart back to these levels right here. So maybe there's another $50, $75 move in the making. I know it's kind of hard to believe, and actually that puts the perspective move to a better magnitude and better opportunity from trading options, because, hey, Amazon briefly shot over 1805 and it retraced back to 1795 at the time I'm recording this. So they're actually going to be open up with a gap higher at this point, about 20 bucks on low volume, which could actually represent a great opportunity. Now, I'm not saying this move in Amazon is going to come today, but it could materialize over the course of a week. Now, you're reviewing the basics of the tunnel, guys. Okay, we've gone for the shift in the tunnel. Okay, and let's focus on this situation. So in yesterday's video, we're showing this chart basically saying, look, here's your yellow line. When stuff gets to the yellow line, what are you supposed to do? You're supposed to buy puts, okay? So buy puts on a bounce. And right now, we're getting exactly such an opportunity. By the way, yesterday we also mentioned to collect some gains once we get closer to the red part of the tunnel. For those of you guys that hit that button, collected some profits when we hit a level of 28.25. Yesterday was the lows intraday, so good job on that. So basically the idea is you want to short at the yellow line, collect some profits closer to the red line, which would be the lower trading tunnel. So here's what we've got now. Pre-market, at the time I'm recording this, we're at 2873.5. Which coincides with this level right here, which coincides, you see these two little spikes right here, after which we went lower, coincides with this situation here. So this is why it's this level here. It's kind of going to be difficult to break above that. it's not that it's impossible, but given the context of low volume that we observe in pre-market, I mean, could we initially hit maybe 28.80 at the open? I hope so, because that would even be a better entry on the put side here. And the probability we're going to move above 28.80 is just not very good. Not unless, like, all of a sudden we see crazy volume. So in the context of lack of good volume, very light volume across the board, this bounce gives us a good shorting opportunity to come in and buy puts right here, right around the yellow line, with a small overshoot so far pre-market above the level we established yesterday of 28.71, in expectation of market reversion and revisiting these levels again, and ultimately further dropping further. Now, because of the lack of volume, we may not get any grand move to the downside. So with that said, it would really make sense to split your position between today's expirations and next week expiration. Don't just put everything in today's expirations. Now, here's an interesting trade, guys, I wanted to cover with you in a bit more detail. Okay, Nvidia announced earnings after hours. The stock popped. So far pre-market's trading around 157. Now, last time it reported earnings, sometimes it really pays to go back and look at the history of how the stock reacted at the earnings report. We actually were at very similar levels. The stock bounced about 10 bucks. Last earnings report, 10, 12 bucks. There's a red area pointing to these red candles. So it says right here, we have danced this dance here before with Nvidia. And the dance was, first we got really excited, then we realized that, hey, there's not a whole lot of stuff to be excited about, and the stock sold off. So what we are saying is today we're likely to see, this was my attempt to draw this candle like this. So basically, look at Nvidia forming this type of candle today. This orange dot represents the level where Nvidia is actually going to be open, because this is a daily chart, so it actually catches the data through yesterday, but this does not combine the data of the after hours pop in Nvidia. So just focus on this, right? Basically, we're open at 157. We could easily revisit the level of 155, possibly drop all the way to 150. Now, the important observation, going back and studying the history of this particular event here, is the fact that after it creates that candle, notice what happens on the second day. It actually gets lower and hits that level of 148. Well, interestingly. So maybe this time we'll combine both moves. We can have a complete switch around from 157 all the way to 148, 149 level today. Yes, that could be a very nice trade. So I would actually consider buying puts on any pop in Nvidia. If it pops at the market open like 158, 159, 160, I really want to pull the trigger right there. So hopefully the market will give us this opportunity. When we look at the weekly chart, guys, the most important thing that comes right away, you should be able to notice, is this death hook. The death hook is the pre-existing condition before a death cross actually would take place. There's multiple other bearish divergences here on the chart, divergence in the RSI. You got a bearish crossover going on in MACD, so just a bunch of bearish stuff overall on the longer time frame. Even though they are slightly upgrading Nvidia price targets to like 180, but it's basically like saying, hey, we're not impressed with the earnings report, so that gives us a high probability of a reversal. This is a 5-day chart representing the pop after hours, guys. So we are considering Nvidia 160 puts at the open. Ideally, if it does at the open pops to like 158, 160 level. Okay, yesterday on the pop it hit to 159.80. So if it hopefully revisits that level right at the open, that's where we want to pull the trigger. Come in, buy these 160 level puts. And the expectation for a total unwind and a reversal all the way to 148, 149 level, but do start taking profits earlier. Sometimes it does stall out. That magic number for Nvidia is like 152.80. Now, this is now a way to look at the Nvidia trade for today. Yesterday, Cisco announced report. It dropped, then it popped, and then it dropped. And after the positive reaction to Nvidia report earlier, Cisco popped again, and then it started fading. And so check out this pre-market fade in Cisco in response to the Nvidia earnings report, sort of a correlation trade. We're not looking to trade Cisco, but I kind of put that chart in here to give you guys a good visual of how Nvidia could trade intraday, so print it out. Kind of that should be some help there. Now here's an easy trade in our view is DE Deer. Deer could be a nice little deer trade today. Basically, the strategy here is wait till it pops to 145. The news is horrible, but you know, some people are coming in maybe thinking, hey, they're trying to nail the bottom here. We don't think this bottom of 139 is going to hold. We've danced as well with this stock around these levels before multiple times. So the level here is 135. Ideally, you want to come in at 145. On the pop right here, you want to open your puts, buy in the money 145, 150 strike puts, start closing them at 140 to 135 level. Clearly, an easy target would be 139, which was the low established pre-market. Now, yesterday was a move 7. Unfortunately, we had many characteristics pointing to a move 2, and just in the last part of the day, market pulled a 7 on us, so it opened positive and it finished positive for the day. This is how it looks on the chart. So despite all odds, what appeared to be like a nice unwind of the market here on pretty strong volume right here on the move when we hit this low of the day of like 28.25. Actually popped after that. Until then, this move too looked really good. But it did result in a 7, which was our second choice for the market move yesterday. Now the 2-day sequence so far is 3-7. Here's your gap down before the move 3. Here's your move 7. And the 5-day sequence is very interesting. 12, 3, 8, 3, 7. The unique characteristic is all of a sudden we got an 8 move surrounded by 2 3s, which is actually highly bearish because that doesn't happen very often. It only happens in about 5% of cases throughout the 13 markets move history. So I take this stuff very seriously, guys. This is overall another reason to be more bearish on the markets rather than bullish. Now here's the yellow circle that I suggested you review in yesterday's video. Basically, we have pointed out a time frame on a chart, or the 5-day 15-minute chart on S&P, saying that look at this V and then look at what happens next. And then we started drawing this. You see that yellow circle was incomplete, but basically the idea here, we're saying, look, we're getting the same V formation that we noticed here, and therefore we're expecting this circle that was beginning to materialize here to be completed within a very short amount of time. So looking into pre-market action today, what was just the beginning of this circle, and notice where this circle ends, right? And notice the formation. So let's take a closer look. August 16 pre-market, yellow circle is completed. So first, it's important to understand that this was the V formation within the yellow circle. Pop, drop, slight drop, basically moves higher. Okay, identical scenario. Pop, drop, move, slight move lower, moves higher. So we are right here right now, 28.73.5, and basically the importance, of course, is we know what happens next. Okay, these two yellow circles are highly symmetrical, and what happens next is this sharp move lower. Now notice in the magnitude of the move is not crazy, so it doesn't really break the level below the yellow circle. So we could expect this this yellow circle to resolve into a move back to that 28.20, 28.17 area. That is ideally the best type of move that we can expect today. So you kind of roughly know the best case scenario for the move lower. And it's a good idea to not calculate the best case scenario. So if we're maybe hitting the level back of 28.30, is to start maybe collecting some gains there, and keep some of the positions for further possible gains. Now, importance of this is to understand what happens not just right after that yellow circle gets completed, but what happens later the following day. We get another move lower. So again, it is wise to split the position between today expiration and next week expiration, because that move, after we slide lower, it's likely to continue lower. Okay, and at that point, we would be below this level of 28.17 likely by Monday. And if that does materialize within that time frame, then it's definitely going to bring everybody's attention to the situation. And before we know, next week we could actually be hitting that level we've been discussing of 27.25, 27.50. Okay, next market move for today. Clearly, everything we've pointed out and discussed so far gives us a high probability of a move 2 for today, which is a reversal. With that said, in most of move 2s, do not try to get in right off the bat. Actually, try to wait the first 30 minutes. Now, that does not include like the Nvidia trade and so on, but you kind of want to wait in a move 2 for the first 30 minutes. The market will and have a high probability of moving higher before reversing between the hours of 10 and 10:30 in the morning. So that's basically our calculations for today. VIX numerically is high in uptrend, so it still makes sense to be buying puts. As far as the move in the VIX, it did gap down pre-market. Okay, I mean, S&P is up 27 points. So, but overall, what we're basically looking at is at the open for the first 30 minutes for the VIX to dip even lower, maybe get to this 18 handle, and after that, we are going to see VIX bounce higher and finish higher by the end of the day. Now, that would be super important with our calculations, because overall, we mentioned that we want to remain bearish on the market overall as long as VIX maintains that 20 level. Now, certain overshoots and undershoots are going to happen. I think that is the scenario that we're getting so far pre-market, but expect the reversal in the VIX and VIX finishing ultimately higher above the 20 levels what we're looking at. But we are calculating a rather sharp move coming in to the downside at 2:15 p.m. So the last hour and 45 minutes is what could actually help the VIX close this gap that it created pre-market and finish above 21.5 level by 4 p.m., 4:15 p.m. Okay, VIX is heading back to 32. That's overall is what we're focusing on. So key takeaways, same thing. Nothing has changed, okay, besides Trump wanting to buy Greenland, okay? And so we're focusing on shorting the intraday bounces. We're buying this week and next week's expiration, okay? And we're sticking with the position for the next 72 hours. Now, the thing that I wanted to highlight, right, the only condition to get out if all of a sudden we're observing some strong volume. So far, there's no concerns on volume. The volume is extra weak. And ideally, for those of you with small accounts, and if you're really trying to materialize some high percentage returns, it would make sense to kind of wait till about 2:15. That's where we think the main sell-off of the day is going to come in on the reversal side. So between 2:15 and 4 p.m. is your big money time. With that, make that money. Let's roll. Have an awesome weekend. I'll catch you on the next trade Monday.